94.3% people make these terrible money mistakes. When it comes to personal financial planning, you can make mistakes without even realizing it. Let's take a look at 10 of the most common money mistakes and how you can avoid them for a better financial future. 1. Not building up on your financial literacy. This is the most underrated financial mistake you commit. An investment in knowledge pays the best interest, wrote the legendary investor, Benjamin Graham, in his book, The Way to Wealth. Thus, investing to enhance your financial knowledge, which is a personal investment. In this fast-paced world, you can easily grasp financial knowledge via several websites and apps that help you improve your financial literacy. In these uncertain times, it is vital to be financially aware and make informed financial decisions to stay in sync of your financial health. Notably, lack of financial knowledge has consequences such as poor investment judgments and the repetition of previous financial mistakes. Financial literacy aims to assist you in better comprehending the intricacies of financial planning, saving, and investing. It is a life skill that you must grasp to maintain sound financial well-being. Financial literacy will help to maintain a secure financial future and prevent repeating the financial mistakes you made this year and become your own financial planner. Before we move on to the next step, if you found value on this video, please like and subscribe for more videos like this. 2. Not having a clear financial goal. When we're too busy with work and other tasks, we often don't want to take the time to sit down and strategize our finances. But when you're unclear about your financial goals, it's hard to take your money seriously. What do you want to achieve financially? And where are you on your journey? When you know which phase you're in, you can be more clear about what you really need. In my personal finance guide, I talk about the 4 phases of personal finance. From nothing to something, this is when you're living paycheck to paycheck. Gaining traction, you have at least 1 month's worth of expenses saved. Having peace of mind, you have a full emergency fund. Financial freedom, you have enough cash and investments to cover your cost of living. When you don't know which phase you're in, you'll tend to make the impulsive decisions that get you further from financial freedom. Like taking out a car loan when you don't have an emergency fund if you suddenly lose your job. As the pandemic and recent worries about recession showed us, job security isn't so secure after all. This leads us to the next mistake. 3. Not having an adequate insurance cover. Not having adequate insurance coverage can be a major financial mistake that one makes. With the rising risk to the life and health of an individual amid the pandemic uncertainties, it is essential that you purchase a suitable insurance cover. Lack of insurance may create financial hardship in times of emergencies. Be wise and protect your loved ones by putting an insurance plan in place and preparing for the unexpected. Insurance helps you indemnify the risk, acts as a financial shield or cover in case of an untoward event, and prevents your accumulated savings from being depleted. You must be optimally insured for both health and life. This is so important given that life and health can be so unpredictable. If you already have insurance cover, review your policy with your agent to make sure you are optimally insured. 4. Buying a car you don't need. Just because you can afford the payment doesn't mean you should buy a new car. Cars are depreciating assets, which means they drop in value as they age. A new car loses 20 to 30% of its value in the first year of ownership. Depreciation slows down after the first year or two, so a used vehicle is usually a better value than a new vehicle. Many manufacturers offer certified pre-owned vehicles, which are typically 2 to 3 years old with low mileage. These programs usually include a full overhaul of the vehicle and a manufacturer warranty. You get the advantages of a new car for a much better value, and all you give up is the new car smell. If you need to loan for a car, then get one that fulfills only your most basic needs. Something that saves on fuel, insurance, and maintenance. And your ego or impulse to please other people shouldn't factor into the decision. 5. Failing to save for emergencies. Almost 60% of Americans don't have enough money in their savings account to pay for an unexpected $1,000 expense such as a sudden car repair or surprise medical bill. Millions of people are without a safety net, and even one accident could be devastating to their finances. It's generally recommended to have enough cash set aside to cover all of your family's expenses for 3 to 6 months. A good rule of thumb is to save 10% of your net income. If that amount seems impossible in light of your monthly expenses, try starting with 5% and increase that amount by 1% each month until you've reached the 10% threshold. 6. Spending more than you earn. Millions of Americans live above their means and struggle financially throughout their lives. Getting your budget under control isn't only about creating a solid plan from which to launch your financial future. Having enough money left at the end of the month to add to savings or pay off your debts can lift a huge psychological weight. Often, correcting overspending is as simple as cutting back on non-essential expenses such as dining out, shopping, or other entertainment. If you can learn to trim down impulse purchases, you can likely free up some needed cash at the end of the month to put toward long-term financial goals. However, if you're struggling to keep up with your budget and have already cut out all the extra spending you can, it may be time to look into more far-reaching solutions. For example, you might be able to renegotiate certain services such as cable and internet, or reach out to your lenders about altering the terms of your monthly debt payments. 7. Not budgeting. When you do not have a budget, you do not have control of your finances. Failing to budget month after month means that you are not taking control of your financial situation. Without a budget, you can make decent money and still struggle to get by. It can be difficult to reach your financial goals when you do not have a solid budget in place. Take the time now to set up a budget and continue to do it every month. You can begin to make better financial decisions if you are budgeting and you know exactly where your money is going each month. 8. Overusing credit cards. One of the most common financial traps, especially for individuals in the early stages of their adult life, is accumulating credit card debt. A credit card is a powerful tool to help build your credit history, but a high credit limit can encourage living beyond your means. Many people don't realize that the minimum payment generally only covers interest. While many Americans carry debt from student loans or car loans, stacking credit card debt on top of other debt causes much financial stress. Responsible use of credit cards can provide many benefits, However, if you're already carrying big credit card balances, it's not too late to recover. Consider using a personal loan or a credit card with a low balance transfer interest rate to knock down those balances. Then find a card with a solid rewards program and a reasonable interest rate to use for everyday purchases while paying it off every month to improve your credit score. 9. Avoiding the money talk with your partner. While they understand that attitudes towards money can vary between two individuals, they choose the path of least resistance. Your money and my money, different accounts and spending, no questions asked. When it is time to start planning a family and considering investing in a home, the need for our money will arise. You will have to join hands. Early in the relationship, find out what the other's preferences and habits are and make the rules that both can follow. 10. Relying on a single income stream. A higher salary won't necessarily give you freedom, having more options does. It's easy to live in perpetual fear of your employer or customer if you only have one income stream. You know your income is vulnerable. When you're in fear, it's easy to say yes to everything and have people walk all over you. But it doesn't have to be that way. You can build a side business, work in a field with lots of job prospects, or invest your money in stocks or real estate. Of course, these things don't happen overnight. So it's a matter of investing in yourself and spending less time and attention on consumerism. When you have more options, you feel more at ease. Best of all, you control your life. Now, isn't that something we all want? If you like this video, please subscribe and write your thoughts on comment section. Thank you for watching.